Just a few days ago, AT&T reported their 2021 quarter 4 earnings, and the results were very solid, beating investors' expectations. Yet their stock price dropped by 8%. Why is this? It's likely due to new uncertainty brought about by AT&T CEO John Stankey. The statements made by Stankey in the following clip are likely the reason as to why AT&T stock tumbled so much.
One of the key questions among some of your investors certainly is whether you're going to do it as an exchange offer or a spin, essentially a split or a spin. I know you're not ready to share that decision, but can you at least share some of the thinking behind either one of those? Because they both have their benefits and or potential drawbacks, whether you simply essentially give a share, a percentage share of Discovery, Warner Discovery to each of your shareholders, or actually do an exchange offer whereby you really would end up retiring potentially a good amount of AT&T shares.
Yeah, we kept that option open for good reason because we wanted to assess what the state of the market was as we got closer to the close of the transaction.
While investors had made the assumption that AT&T's deal with Discovery would be a spinoff, allowing them to receive shares of the new company, Stankey mentioned that that might not be what they end up doing. Fortunately for AT&T investors, AT&T recently released another announcement that I personally believe is really great news for AT&T investors.
From AT&T, with this, we're learning that AT&T is going to be spinning off its interest in WarnerMedia to Discovery, 100% of the interest in a pro-rata distribution. AT&T shareholders will get 0.24 shares of WarnerMedia Discovery for every share of AT&T they own. That means AT&T shareholders are going to get stock representing 71% of the new company. Warner Brothers Discovery will own 29% of the new company. The deal is expected to close in the second quarter of 2022. And maybe some of the new news here, AT&T's board approved a post-closed annual dividend of $1.11 a share.
So in this clip, we learned that AT&T will be doing a spinoff with Discover, allowing investors to own 0.24 shares of WarnerMedia for every share of AT&T stock that they own. We also learn exactly how much AT&T will be paying out in dividends, as well as what AT&T's expected debt levels will be after the spinoff deal goes through. Now, I am a huge believer that finding the intrinsic value of a stock is one of the most effective ways to make great investment decisions that can beat the market. So now that we have new financial information on AT&T, we can use this data to create financial models in order to calculate the intrinsic value of AT&T. So for this valuation, we are going to be using my ultimate stock valuation spreadsheet that I have created. You can download this spreadsheet on my Patreon page at the link in the description. So we are now looking at my stock valuation spreadsheet, and on this spreadsheet, you can see I have 4 different intrinsic value models down below, which all roll into my output tab. So in order for this model to work, the first thing we need to do is come to our stock tab, and go ahead and plug in AT&T's stock ticker and hit enter. And here you can see we just have some data listed on AT&T. They did have a little bit of an update, but their 1-year trend line is way down. So like I mentioned earlier, we do have 4 different intrinsic value models, but for a company like AT&T who's existed for so long and kind of has a unique industry, I think the 2 most useful intrinsic value models will be our discounted cash flow analysis and our dividend discount model. So let's go ahead and jump over to our discounted cash flow analysis. So we are now looking at my DCF analysis, and for this model, I actually used some of the new data that AT&T just recently released. So in order to perform a discounted cash flow analysis, the first thing I had to do was project the growth rate for AT&T's future free cash flows. So in order to do this, I looked up the historical free cash flows for AT&T and found their average growth rate to be about 13.94%. I took this into consideration as well as industry standards and analyst expectations and projected a growth rate of about 9% for AT&T. I then applied this to what they're expecting their 2022 free cash flows to be, which is about $20 billion, projected it forward about 10 years. I then took the present value of these future free cash flows and added them all together to find the sum of these future free cash flows. I added the cash and cash equivalents, and then I subtracted their total debt, which AT&T just recently announced what they're expecting that to be after the spinoff. I was then able to find the equity value of AT&T, which I then divided by their shares outstanding, which allowed me to find a discounted cash flow analysis price per share of $37.34. So let's go ahead and jump over to my dividend discount model now. And the idea behind a dividend discount model is you should be able to value a stock based off of how much they're paying out in dividends and how much that dividend grows in the future. Unfortunately for us, AT&T did just announce how much they're going to be paying out in dividends in 2022, which is $1.11 per share. So you can see I took that number and projected forward how much they should be paying out in the future, and based off of this, I was able to find an average growth rate. After finding the discount rate we're going to use, you could see based off of our dividend discount model, I was able to find an intrinsic value of $35.25 per share. So let's go ahead and jump over to our output tab. And here you can see our stock valuation based off of our DCF and based off of our dividend discount model. I feel like these are the two most effective to value a company such as AT&T instead of Graham's valuation and multiples valuation. When we average these two together, you can see I found an intrinsic value of $36.30, which is well above the $24.56 that AT&T is currently trading at. I am a value dividend investor, so I'm going to go ahead and apply a margin of safety as well of about 10%. And you can see based off of this margin of safety, our acceptable buy price should be $32.67 or anything below that. So our stock valuation model is giving us the signal to buy this stock. Personally, I have added 6 shares of AT&T stock to my dividend portfolio, which you can see in my monthly portfolio updates. AT&T is a stock I'm going to be watching very closely in the future and may even add more shares to my portfolio. Are you going to be buying AT&T stock? Let me know your thoughts in the comments below. If you'd like to be able to download my stock valuation spreadsheet or any of my other investment trackers, then you can head to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching the video, and please don't forget to like and subscribe to the channel.